Thank you for calling TriStar Properties and Triumph Development. If you know the four-digit extension of the party you wish to reach, you may dial it at any time during this message, or listen to the following menu and make one. Thank you. One moment, please.
Tom Mohan.
Hi Tom, it's Graham Cannon calling from Insight Marketing Planning.
Hi Graham, how are you?
Good, thank you. How are you?
All right.
Good. Thanks very much for taking the time today. We really appreciate it. I thought what I'd do first of all is just kind of recap on what we're doing here, and then get into the discussion. I guess the one thing I wanted to check with you first of all was how much time you have.
Well, I thought it was going to take about a half hour.
Yeah, that's absolutely fine. All right, good. Well, to get started, perhaps if I could just kind of give you a bit of the background again. We are an independent market research company, and we've been engaged by ABN AMRO to conduct some research amongst their clients. I mean, it's really about understanding the extent to which ABN AMRO is meeting a wide range of your financial needs and getting your thoughts on the products and services they do provide. I guess with a focus more on perhaps more sophisticated investment banking or trading rather than just traditional commercial banking. And we'll be using this information really to help improve the products and services that ABN AMRO offers. The way that we do these things is always on a confidential basis. So, I mean, I've asked you if I can record the call, but that's simply so I don't have to desperately try and write down everything as we go along. But the way that we use these is that we are going to pull together the findings from all the interviews that we do, and we don't reveal specifically what each person said in these interviews.
Okay.
I guess the only other thing to say is that at this stage it's very much kind of an open discussion. I've got some things I'd like to go through, but it's really about hearing your opinions and really you're kind of helping us, because in the next stage we're going to put together a kind of a shorter, probably internet-based questionnaire for clients. But at this point it's quite a sort of open discussion really. So we just really want to hear what you think.
All right.
Okay.
Does it help you to understand our business and what we need from the bank?
Absolutely, and in fact that was pretty much my next question.
Okay.
Yeah, if you could give me a bit of background about yourself and the company, that would be super.
Well, our company is in the real estate development business. That's kind of a broad term, but when any order of real estate, we would endeavor if we thought we could make money at it. But if you look at our recent past, we have acquired land, developed land, turned that raw land turned that land from what it was into something that was more valuable by getting the zoning changed, our marketing it to whomever. In some cases, that land then turns into an opportunity to build a building for a tenant or for somebody who wants to own a building. And so then we make undoing the vertical construction, not just the land. And so, we've done a whole variety of things, but all related to the creating value in real estate.
Okay.
And so what we have used LaSalle Services for primarily is to provide the loans to do those developments. Of course, we keep deposit accounts with them because they want us to keep deposit accounts with them. It's a little inconvenient to have our deposit accounts with them since we're in St. Louis and they're banking. They don't really have banking branches here. They just have a lending office here. They're the closest bank that we could walk up to a teller's window is in Chicago.
Right.
So that's a 5-hour drive or a short plane ride to go to the bank. So that's not what we use their services for.
Mm-hmm.
they have provided some sophistication, though, to the managing of our interest rate risk through their derivatives department, which has been helpful. And so that's really what we use them for. The advantage of LaSalle as a lender is that they are a big bank, and so they can provide substantial sized loans, and they are quick to give you an answer. And fortunately for us, the answer has usually been yes, and in most cases they have provided us terms that we liked better than their competitors here in the St. Louis marketplace.
Okay.
So we've done a lot of business with them. Now, on the other hand, they are a big bank, and if we need a relatively small loan, $2-3 million, infrastructure of a big bank and all of the pieces that have to, that whether you're doing a $20 million loan or a $3 million loan, the process is the same number of lawyer hours, the same number of departments at LaSalle that get involved. Not that they don't do a good job, but a small bank who's going to loan me $3 million on a project, the process is a lot quicker and easier and probably less expensive than a small local bank. It's almost like I can call them up and they send the note and the documents over that day, and I can sign them and send them right back. Well, that was never going to.
Sure.
That's understandable.
Sure.
So that's kind of the background of what we use LaSalle for, and I don't. Their people here are aware of what their services are, and they try to sell us their services, their other services, and we have used the ones that have made sense to us.
Okay. All right, that's great. All right. I guess what would be useful for me is to understand a little bit more about decision making on the institutions that you use. You know, so you mentioned that obviously for small loans it doesn't make sense to use an institution like LaSalle. But just more broadly, how do you get about deciding, you know, which institutions you're going to use for what?
Well, I mean, there's a whole stream of banks who would like to do more business with us.
Yeah.
And you know, these loans, obviously the collateral is important to the bank, but in most cases, when it is the front end of a real estate development, to a large degree, the lenders are relying on the financial abilities and the technical abilities of the borrower to make it happen. And you know, these loans are full recourse loans, and so you know, even if they're loaning us $20 million, if it doesn't work out, they're coming to the principals because they've signed personal guarantees.
Right.
And so you know, that is the reason we choose one bank for the other is the relationships with the individuals.
Right.
And their ability and those individuals' ability to understand the proposal quickly and to give you an answer quickly, and then of course the price matters.
Right. Yep. Okay. What I've got here is a number of scenarios, and what I'd like to do quite quickly, I think, is just work out, you know, which of these are relevant for your business and which are not relevant. So, first of all, exposure to fluctuating currencies, is that something that you face or not really?
Fluctuating currency?
Yeah.
I mean, we don't have any foreign type deposits or loans. Everything is in the United States, and actually it's in 3 markets:
Okay.
St. Louis, the Tampa Bay area in Florida, and the Phoenix area in Arizona.
Okay.
And only to the extent that any of that has to do with interest rates would it make any difference to us. I mean, typically we are borrowing at LIBOR plus a markup depending on the perceived risk of that particular transaction. If it is a building, leasing a building to a credit tenant, then the markup is in the 1.5 to 1 3/4 over LIBOR range. If it is a piece of raw land out in the middle of nowhere that we just have a great idea for, the markup might be 3 over LIBOR.
Right.
With LaSalle, and that's kind of the range of that we've done. The small banks, they will price off of LIBOR, but they're much more accustomed of pricing off of the prime rate, and so there is a consistent difference between prime and LIBOR that you can track over time. I mean, it's not perfect, but it's very close, and so it's pretty easy to compare one rate to the other.
Mm-hmm. Okay. All right. So the next scenario I have is interest rate movements, which you have mentioned as being relevant, and you said that you have done some hedging, or you have some kind of...
Yeah, what we've done is that, what we found is that in cases where we plan on owning the property for a long time, the choices are to go to a traditional long-term lender like an insurance company or a pension fund or something like that, and you lock in your interest rate with them, but you lock in all kinds of other unattractive terms, like the price of unwinding it, and the front-end cost, and many of those things. And the thing that you get with them, though, is a non-recourse loan, typically. Mm-hmm. But the non-recourse loan is at a lower loan-to-value because they build in some extra security for themselves in the transaction. What we've done with LaSalle is in properties where we felt like we were going to hold it for a considerable period of time, we would use a swap transaction to lock in the interest rate for that period of time, and then you're really only, if your plans change, you can win or lose in the getting out, but it's just purely based on where the market is. Fortunately, we locked a lot of the swaps that we did over the last several years were when interest rates were lower, and so now in each of those cases, if we wanted to sell the property and pay the loan off, not only would we would have the advantage of getting money from our swap as opposed to paying money to get out of it.
Right.
And so it's purely market driven, and it's seamless for them to do it. You don't have to go refinance the property or anything. Mm-hmm. You just call up the people in the derivative department and say, I want to tell me what the swap rates are at this term, and this term, and you have your answer in about 30 seconds. Mm-hmm. And you can decide whether you want to lock it in at that point. So.
Right. Okay. All right. Does the organisation fund itself solely through bank financing, or do you have access to capital markets?
It is not something that we would. It's not a business where that's usually done at our stage. You know, we don't have a huge portfolio of real estate that we own.
Mm-hmm. Okay.
some people do, and they put it into a package and they finance the whole package and use a capital market type thing. We're manufacturers of real estate,
Right.
as opposed to long-term investors in real estate. Now, that doesn't mean we don't have some things that we've kept for a period of time, but we try to buy property wholesale, create value, and then we sell it or on to the next project.
Got it. Okay. All right. Okay, let me just run through a few other scenarios quite quickly that I suspect are not so relevant. Fluctuating commodities prices, is that something that you are exposed to?
No, not really. I mean, only to the extent that the price of goods and services affect what we have to pay for things. Mm-hmm. When the price of oil goes up, the cost of producing a finished product, a building, grading a piece of land, the price of that goes up. Sure.
But you're not sort of heavily dependent on one particular commodity or a couple of commodities, really.
I mean, there's the cost of construction materials probably affects us more than anything.
Sure.
And in some cases, if you were a long-term holder of properties, of buildings, when the cost of construction goes up, the value of what you own goes up, because to replace it the cost goes up.
Sure.
But we're as I said, we're more manufacturers, so the cost of our materials, if you will, and labor go up, but then our cost goes up and makes our finished product, if you will, more expensive than something that may already exist in the marketplace.
Mm-hmm. Okay. All right. Are you involved in merger and acquisitions of any kind, or is the company pretty stable?
We're very closely held, and we do some partnerships, but it's generally with people that are in the business that we know.
Okay. Are you heavily dependent on sales to a few customers, or no? Did you say no?
No.
Heavily dependent on a few suppliers.
In most cases, we don't know who our customer. We know the profile of our customer, but we don't know who he is when we buy this piece of land.
Sure, I understand. And are you heavily dependent on a few suppliers?
Not really.
Not really.
Our suppliers are contractors, and you can't go 100 yards in the States without running into somebody who's a contractor.
Sure. Yeah. Absolutely. Yeah. Okay. So when you talked about the fact that the main thing that LaSalle's been doing for you is financing, is loans. Let's see. Do you frequently kind of reallocate financial holdings across asset classes?
No.
Okay.
I mean, the properties are generally owned in the form of a limited liability company.
Mm-hmm.
The limited liability company will have 3 to 5 members.
Mm-hmm.
When the money comes, we all put money in on the front end. For the equity piece of it, we borrow the money, we produce the product, we sell it, and we take the money out and put it in our individual pockets.
Right. Sure. Okay. All right. And given the type of company you are, I guess, does the organisation have a pension fund?
We have a 401k plan.
Okay. And are there any issues with underfunding?
It's not the same as a pension. The 401k is not the same as a pension plan. It is not a defined benefit. It is a defined contribution.
Oh, I got you. Yes.
So our plan,
charge.
And there are a whole variety of ways that these things can be structured. Our particular one is that the company puts in, contributes 3% of the person's gross income up to the limits that the IRS allows into the plan, and then at the end of the year, we can put in an additional amount that's a discretionary contribution. But there are strict rules on how big that discretionary contribution can be. The primary objective is the few of us that are owners want to maximize the amount we can put into that. So we have the consultants work backwards to get us to the number that the numbers that we need to use in order to maximize the amount that we can contribute.
Right, I understand. Okay, all right. Okay, I'd like to understand a little bit more about where LaSalle sits. I mean, I imagine that you work with a range of financial institutions. I mean, where does LaSalle sit in terms of, how much of your business, if you like, do they have, or sort of, how?
They have probably. I mean, I've never really sat down and done the math, but just in an overall feel for it. On the loan side, in total dollar volume, all of our loans outstanding versus how much of it is outstanding to LaSalle, they probably are 85, maybe even as high as 90%, because they have all of our big loans and maybe a couple of the smaller loans, and the small loans usually are something that happen quickly and are over quickly, and so they're not around very long either. So LaSalle has become our primary bank. 5 years ago, we had other banks that we had done business with, but LaSalle has come on very strong during that period of time, and it's probably to a large extent because of my relationship with the primary lending officer, John Bew, our primary contact, and the ease of dealing with LaSalle versus the other institutions that are of a size that could do a $20 million loan. Bank of America calls on us, but there's very little consistency in who the loan officer is. The bureaucracy is incomprehensible. The U.S. Bank is similar. They've got a new loan officer every week. One week they want to do real estate loans, the next week they don't. Those big guys have taken themselves out of the market as far as much of the real estate lending in the St. Louis marketplace, and to the point where I don't even talk to them now. There's some of the larger local banks that can do those $20 million loans, but they typically cannot come up with regional banks. They can do that size of loan, but they can't typically give me the same kind of pricing without.
Right. Okay.
Kind of out of the picture. And then the other ones, the banks are so small. I mean, a $3 million loan is a big deal to them, and but yet they look at the guarantors and they go, what's our risk here? It's almost none. These guys can write a check to pay this off, so we'll just, so we can close with them without without any attorneys. I mean, one of the things that LaSalle is going to have is they're going to have the attorneys write the documents and all of that. The local banking gives you the pre-printed form.
Yeah, okay. All right. Now, you've talked a little bit about this, but I'd just be interested to hear a little bit more about how you find out about what LaSalle has to offer. I mean, do they talk to you about other issues, other products that might be of interest to you, and how does that kind of happen?
Well, I mean, they sold me the derivative thing. I mean, I think John had Robert Leonard come in here and meet with us. This was, probably 5 years ago now, and we've, done a number of transactions through the derivative department since then.
Okay.
There's a consistency of who you're dealing with, because Robert was there and he's still there.
Right.
He's who you deal with.
Okay.
And that's important. As far as the other services, I mean, we keep a large number of deposits with LaSalle because we understand that affects how they feel about what rates they give us. So if we're going to keep deposits someplace, we want to have the benefit of the good graces that go with them. And so we have, I suppose, in commercial paper and deposits right this minute, we have about $6 million in banks.
Right.
And 4.5 of it is at LaSalle.
Right.
The other stuff is spread out in, a series of $100,000 or $200,000 increments with a series of banks just for convenience purposes, because they are the branches, half a mile away from here.
Sure. Okay. All right. I guess just to wrap up, what I'd really like to understand finally is just, you talked a little bit about where ABN AMRO is strong and where they're weaker in terms of, the smaller loans, for example. But any other kind of...
Not that they can't do them or wouldn't do them.
Yeah.
Just that the process is not worth the time and expense. And it may not be worth the time and expense to them, frankly.
Sure, I understand. But just more generally, in terms of strengths, weaknesses, are there any improvements that you would like to see?
No, not really. I mean, to me, it depends on the people that I'm dealing with, and if the people change, then the whole thing could change. But other than that, I can't see what would change the way I feel about them. I guess they could change the way they feel about us if all of a sudden they were worried about our ability to do things.
Right.
There's more chance of that than the other.
Okay.
However, if for some reason a competitive bank stole John Bew away and they brought somebody in who was hard to get along with and not very bright, then I could see how that could change.
Sure.
Then they become Bank of America.
Yes. Okay. All right, Tom. I think those are all my questions. I should have asked you up front. Can I just check? What's your position in the company?
Well, that's it's kind of a nebulous thing. When I first came here, it was to be the chief financial officer.
Okay.
And my card still says that on it. That was 5.5 years ago. And so I do fill those roles. However, again, the way we're structured, the entity that I get my paycheck from doesn't really own anything. it charges some fees out to the entities that own the real estate. So all the value is really in the real estate entities. And I'm a member in some of those other entities because a lot of those entities were here before I got here, so I'm not part of those. And so we wear two hats. You're an owner of the project, part owner of the project. You have a job to do as part of TriStar. However, there also are no lines. I spend at least 70% of my time on non-financing type things. Okay. Just because there's all kinds of things that have to be done. There's zoning issues. There's getting the construction contracts negotiated. It's all of those things that the job description is whatever needs to be done that day, including talking to you.
Okay, but presumably whenever there is financing involved on a project, then you are involved. Is that right?
If there is financing, then I'm involved.
Okay. All right. Okay, that's great. Okay. Well, I think those are all my questions. Is there anything else that you wanted to say as part of this?
Not really. I mean, I guess I've already said it, and that is that it's the people that I deal with that makes the difference, you know?
Yeah.
The product that's being provided, funds to do our business, is available at a whole variety of places.
Yeah.
And it's a matter of who you're dealing with that makes the difference. I mean, if I had to borrow money from Bank of America, because they were the only people that I could borrow from, then I would deal with the people that I had to deal with. You know, it just would be more cumbersome.
Yep, I understand. Yep. Okay. Well, that's great. Thank you very much indeed for your time. One other thing, I don't know if we mentioned this up front, but we have an incentive, in return for your participation in this process. And what we can do is we can either just send you that for you to do with as you wish, or we can put it straight to a charity. How would you like us to handle that?
What is the incentive?
Oh gosh, I knew you were going to ask me that. I've forgotten how much it is in dollars. I think it's like $150, something like that.
Well, just send it to me.
Okay. All right, we'll do that.
Am I going to get a 1099?
A what, sorry?
A 1099.
Sorry, what's that?
Are you familiar with a W-2?
Yes, I did live in the States for about 4 years. So
a 1099 is a similar kind of document reporting your income to the IRS.
Oh, I see.
As a W-2.
Oh, I see. Okay.
It comes from someone other tthan your employer.
I see. I got you. Okay. I don't think we were planning to get into 1099s. All right, Tom. That's great. Thanks very much for your time.
All right. Thank you.
Thank you. Bye now.